Start. Start. Very good morning, everyone. How are you all? Super fine. Last class we almost completed in days 10. Any doubt apart from the last concept? Last concept of that chapter was Appendix A to India's 10, distribution of non-cash asset to the owner. We'll discuss once again that. But apart from that, if you have done the questions from question bank, we can discuss. Any doubt? बताओ. Hmm. Everyone, no doubt. You have started or not started? India's 10 started till now, no doubt. Not completed. Chapter not completed, na? Okay, okay. How many questions you have done? How many questions you have done? Chalo. Doubt. Doubt number 1. Question number 10. 1, 1, 11. Okay, let us come to question number 11. The board of directors of ABC Limited approved the financial statement for the reporting period. Itna, the management discovered a major fraud and decided to reopen the books of account. The financial statement was subsequently approved by the board of directors on June 30. What is the date of approval for the issue as per the Ind AS 10? So what is the date of approval? Already I have said this point when I was disclosure that the owner and the other person have a special power to amend the financial statement. If they can amend, then that becomes the date of approval. So in this case, the date of approval will be what? 30th June. We have discussed this point. We have discussed now. Then why you require clarification? Write down. Good question. Good question. Then any other doubt? Everyone? No doubt? Can we proceed? Question number 7. Okay, let us come to question number 7. Question number 7. ABC Limited is a trading company in laptop on 31st March. Company have 50 laptop which were purchased at rupees itna. Company has considered same price for calculation of closing inventory. Means they are considering that cost price and NRV which are lower. So NRV is more than cost price. Therefore value become cost price. Correct? Yes, sir. On 15, the brand advanced version of same laptop is introduced in the market. Already I have said this point. If technology changes is always known to the businessman on 31st March. It is not immediate introduction. The information will be always available on reporting date. This point we have discussed. 3 examples I have taken for inventory. Then also you are asking doubt. 3 questions I have taken for inventory. Bolo yes or no? 3 examples I have taken for inventory. Then also doubt is there. It means revision is to 100% required. 100% required, and this particular question always remain doubt in my Telegram group. Telegram group means I'll give a link of a group in which my all the students who are there will be there and they will be discussing doubts. Correct now. So this doubt is also very much common. Question number 7. I think you have understood. It is an adjusting event. Adjusting event now. Write down super doubt. Must revise question before exam. I don't understand, even though I discussed this point in class, then also doubt remain. For inventory, doubt always remain. Any more doubt? What example? Example number? Example number 4. Come to example number 4, everyone. This example, A Limited. A Limited agreed in the principle to sell a plot of land on 18 March 2012 at a price to be determined by an independent valuer. Pending the agreement for sale and due to non-receipt of valuer report, the sale of the land could not be completed up to accounting year and 31st March 2012. The company received the report on 7 April and the agreement was signed on 10th April. The financial statement were approved. Whether it is an adjusting event, बताओ. You only say first agreed in principle. I already said agreed means if question is silent, always control is transferred. Valuation report is only a formality. Correct now. So once again the condition is available means I will say this question is actually not a question of Ind AS 10 already, but then also they are asking, therefore this example has been taken into consideration. Correct? It will be an adjusting event. And valuation report was received before approval of financial statement only. Correct now. Agreed in principle. Agreed in principle means what? Control is transferred. Got it? The agreement is there. It is signed only. Where it is mentioned. And the agreement was signed on so on 10th April. Okay. Agreement was signed, but what they said, agreed in principle to sell. Principle word is written now. Are you able to understand? Means the control is transferred. Control is transferred, only some formalities are left. Only some formalities are left. Understood? So agreed in principle means control is. I always say that for accounting, agreement is not relevant. Substance will prevail. So from the question it is understood that yes, control is transferred. Got it? Correct? Can we proceed? Then also it is okay. Yeah. You can say in this way, if it is signed before approval of finance, before reporting that, then that example, whatever I have taken. Understood? Yes, sir. I have not read that point. Okay. Now, any other discussion? Any other discussion? No. So let us come to the last point once again about distribution of non-cash asset to the owner. Let us read whatever is given. We have not yet read this entire point. So you have understood what is distribution of non-cash asset to the owner. This point have you understood? So when I am saying non-cash asset, so can I say it can be either property, plant and equipment, it can be inventory, it can be any other item other than cash? Other than cash. Non-applicability of Appendix A to Ind AS 10. Non-applicability means it is not applicable to following cases. It is not applicable to the following cases. So first, it is not applicable for accounting in the books of honor who received such distribution. Means Appendix A is applicable to the entity who distribute non-cash asset. It is not applicable to the shareholders who receive such distribution. Understood? Second, it is not applicable to distribution of non-cash asset to any entity which is ultimately controlled by same party before and after distribution. Have you understood? Correct. Have you understood this point? अरे बोलना रे. Have you understood this point? No, I have also not understood. So can we defer? Because this point I will discuss where? Under Ind AS 103. So under Ind AS 103, once again I will come to this point. Correct? So I will not discuss anything about this point because I know I will do detailed discussion about this point where in business combination chapter. Already written, refer which chapter? Ind AS 103. Correct? Got it? Okay. Then this point is pending. Nothing to worry. I will only come to this point once again. Nothing to worry. Chalega? Yes, sir. Then point number 2, applicability. Applicability. It is applicable to following non-reciprocal transaction. I hope you have understood what is the meaning of non-reciprocal transaction now. Correct? Between entity and owner. Distribution of non-cash asset. It is applicable to distribution of non-cash asset, and also it is applicable to distribution that gives an owner an option of non-cash asset or cash alternative. Means suppose an option has been given that shareholders may opt for non-cash asset or shareholders may opt for cash also. If option has been given, then also this appendix will be applicable. But if suppose distribution is only in cash, then this appendix is not applicable. Then already I have said, then go to which Ind AS? Ind AS 32. Already I have said in last class. Correct? I have written refer Ind AS 32. Correct? Chalega. Accounting treatment. On the date of proposal of announcement, no entry. I hope you have understood this point. Correct? On the date of declaration and approval of such dividend, the journal entry is very simple. Retained earning account debit to dividend payable, or you can say dividend distribution account. Correct? Dividend payable account means a liability will be created, but the amount of the liability will be equal to with the fair value of non-cash asset held for distribution. With the fair value of non-cash asset held for distribution. Got it? Got it? Yes, sir. Then on reporting date before distribution, it is quite possible that reporting date came before distribution, as in my example last class. Correct? So in that case, dividend payable will be reassessed with any changes in the value of non-cash asset held for distribution. We have done that also. It was fair value was 520, then it become 5. No. The fair value was 500, then it become 520, then it become 550 now. Yes, sir. So once again, the last on the date of actual distribution, once again we'll do reassessment. So once again we'll do reassessment as per the information given in the question. Correct? Then distribution journal entry. Distribution journal entry will what? Dividend payable account debit to non-cash asset. Dividend payable will be with the carrying amount, and non-cash asset means it can be inventory, it can be property, plant, equipment, etc. So it will be at carrying amount. Carrying amount as per respective Ind AS means if it is inventory, so already we have applied Ind AS 2. If it is property, plant and equipment, already we applied Ind AS 10. Correct na? Sorry, property, plant and equipment, already we applied Ind AS 16. So the carrying amount as per respective Ind AS will de-recognize. We will de-recognize. Means we can say carrying amount and carrying amount. Carrying amount and carrying amount. So this carrying amount as per what? Respective Ind AS. As per respective Ind AS. Any difference will be recognized in PL. Now, any difference will be recognized in PL. Now, the general rule is what? Any income and expense, everyone, the general rule is what? Any income and expense will be transferred to PL. The general rule is what? Any income and expense will be transferred to PL, and any distribution to owner will never be transferred to PL. Any distribution to owner of whatever nature, whether in cash, whether in non-cash asset, will be debited to retained earning. Retained earning is nothing but PL appropriation account. But now in CA final, because we become matured now, so now we will not use PL appropriation account, we will use retained earning account. Retained earning account. Got it? Correct? Have you understood? So can you see general rule is what? Income and expense will be transferred to PL. Now the question is that the difference between these two, whether it is a distribution, it is not a distribution. Correct? Means the carrying amount of the asset in my example was 400 and the fair value was 515. 515. So there is an increase in the value of asset. So any increase in the value of asset is also a gain. Any increase in the value of asset is also a gain, and because it is already distributed, therefore it becomes realized and therefore it will be transferred to PL. Have you understood this point? Have you understood? So you are giving a asset which you purchase at rupees 400 to your shareholders at rupees 515. The difference is the gain only. Difference is the gain. So it will be transferred to PL. If you are not satisfied with me with this explanation, are you satisfied? You are not satisfied now. I know, because from your face I can understand. If you are not satisfied with me with this explanation, so I will give you another explanation. Can I give? But smile now, please. Morning, morning, such a serious face. I will die, huh? Smile. Correct? Nothing to worry. Let me do in this way. Suppose you will want to distribute in cash. So what you will do? First you will sell your inventory, then cash will come, and then cash will be distributed. So if you want to sell the inventory, but you will sell inventory at what price? 515. अरे बोला रे. So suppose sale has been done at 515. What is the cost price? But this gain will be transferred to where? PL only. PL only now. And then whatever cash is coming, that will be distributed. So accounting should remain same now, whether you are distributing cash or whether you are distributing non-cash asset. Accounting should remain same. Are you able to understand? So if you want to distribute in cash, so first you will sell your inventory at rupees 515. The cost price is 400. The difference will be transferred to PL. That only we have done. That only we have done. Therefore, this gain will be transferred to PL, not retained earning. Not retained earning. Correct? Till now, no question has been given in ICAI study matter regarding this concept. Till now, no question has been given. Therefore, I have only created one question. You can see this question is created by me. So, whenever a question has been created by me, it means there is no question in ICAI study material. Correct? So, whenever I am creating some question, it means there is no question in ICAI study material. From examination point of view, because you are a smart student, you can delete also. It is your choice, your career, huh? Your choice, your career. You can delete this type of question because remote chances with no treatment. अरे बोलना रे. Remote chances, हाँ, remote chances. It may also come, huh? Remote chances means what? It will never happen. It can happen, but chances is very, very less. Very, very less. So if you want to delete, you can delete. It's your choice. Understood? So I am just informing that there is no question in ICAI study matter, but I hope you have understood now. I hope you have understood now. Can I conclude? This chapter is over from my point of view. Can I conclude? Can I come to the next chapter if you permit? Permission granted? Yes, sir. Thank you very much. The sound should come. Coming to the next chapter. The next chapter is what? Very simple chapter. I already said I will start with Lollipop chapter. The two chocolates are pending now. Two chocolates to whom? Hatnala. I know face, huh? Two chocolates absent. Just do the needful. Anyone? Any more chocolates? One chocolate was made. You don't want? Why you are not raising your hand? Say thank you to him. And not to me. Him. One thing in India, just one thing in India, this is common. We always clap for others. Always we love to clap. Believe me, one day what happened, this is my nature. You may like, you may not like this. One day I was in airport, correct now. Airport means I was going somewhere. So one day I was in airport. So one actor came, the movie hero came. Everyone started clapping. Oh, I said, what happened? Everyone started gathering there and they started clapping. What happened? He's also human being. I also human being. I am working for my family. He's working for his family. So why you are attracted to him? There is no rule. But I don't understand why everyone is going there. My wife says, "Chalna, chalna." I said, "You want to go? Go. I will not go." Correct now. Because I always think I am only the best. You are only the best. Clap always for yourself. If you want to clap, clap for yourself. Otherwise, don't clap. Sometimes we are supposed to motivate others. That is the other thing. If you want to motivate others, then you can clap. But I always think we should motivate ourselves. Now, coming to India's to inventories. This is the only chapter which you are doing from foundation, inventories. अरे बोलना रे. And same thing, whatever you have done in foundation, same thing was done in inter, and more or less same thing we'll do in final. More or less. Once again, I will say 90% AS2 and Ind AS2 are same. Means if I will do the difference, this chapter, so of course you can understand by your own. But already we have taken one assumption that I will assume that you don't know anything. So let us assume that and let us proceed. Let us proceed. So inventory. Sir, what is the meaning of inventory? I will not ask. What is the meaning of inventory? Because if I will ask, you will say inventory means stock. Stock is a general term. Stock does not mean inventory. I will say stock is interchangeable word. But stock can be stock of anything. Means for example, just try to understand. We can see this is the stock of benches. The stock is a general term. We use from our traditional days, closing stock, opening stock. We think inventory and stock are common name. No, but stock is a different name. Inventory is something different. We should basically say stock of inventory. Stock of inventory. Correct? So we are not going into the name. We are not going to name. So inventory is the correct term. In financial statement also we write inventories. We never write stock. We never write stock. Understood? Have you understood? If you are writing stock, basically you write stock of raw material, stock of finished goods. In this way, we relate that stock means inventory. Got it? So, what are inventories? So, inventories in simple word, I will say there are two type of organization. One is manufacturing organization, one is trading organization, non-manufacturing organization. For manufacturing organization, it will be finished goods, work in progress, and raw material. Correct? And for trading organization, it will be what? Stock in trade. Stock in trade. Stock in trade. Correct? And there is one more organization known as service organization. So whether for service organization there will be some inventory. For example, I am a service, I am providing services now. So for me, whether there is any inventories, what do you think? Yes or no? How many are saying yes? Yes. Can you give me some examples? Very good. Books. Books. And I will say simple example, batteries. I have many batteries which are not yet used. So what is that? That is my inventories only now. That is my inventories. Whatever I consume, that is also inventory. I am consuming, not I am not eating. I am consuming in providing my services. Correct? That is also inventory. So once again, there is some misconception that only for trading and manufacturing we have inventory, but for service organization also we can have inventories. Correct? Let us read the definition. Inventories are assets. Whenever assets come, means two conditions. There are two conditions. Already we discussed control and future economic benefit. There must be control. There must be future economic benefit. So whenever we say asset, in your mind what should come? 2 point. Control and future economic benefit. Future economic benefit. FEB means what? Future economic benefit. Correct. So inventories are asset. Correct. Which are held for sale in the ordinary course of business. Which are held for sale. Means can I say it will be finished goods or stock in trade? Finished goods or stock in trade. Okay. Which are held in the process of production. Means WIP, work in progress, and which are held in the form of material or supplies to be consumed in the process of production or for rendering of services held in the form of material or supplies to be consumed in the process of production or for rendering of services. I will say better, the best example are raw material. Understood? Any doubt? Have you understood? Correct? Got it? So held for sale in ordinary course of business. Held for sale in ordinary course of business. Correct now? So now one doubt will come. So what is ordinary course of business? Ordinary course is not defined anywhere. It is a very subjective terms, and can I say every business, every entity knows what their ordinary course of business. For me, if you ask me, sir, what is your ordinary course of business? I will say giving premises on rent. That is not my ordinary course. Correct now. But I may give premises on rent also. I hope you are understanding. My ordinary course of business is what? Teaching CA student, providing coaching to CA student, that become my ordinary course of business. But it is not defined anywhere. It is not defined anywhere. But can I say it can be understood from the objective of business? It can be understood from the objective of business, means management will decide whether it is ordinary or it is not ordinary. It is ordinary, it is not ordinary. I hope you have understood. Correct? Any doubt? No doubt? Correct. But if I go to AS5, AS5 has defined ordinary activities. AS5 has defined ordinary activities. So whenever we have a doubt, means if index is silent, so we can take guidance from AS5. Bole yes or no? If index is silent regarding any point, so we can take guidance from AS. There is nothing wrong in taking guidance from other person now who are also expert. अरे बोलना रे. Suppose if I don't know anything, I am teaching FR, so you can take guidance from any other faculty who is teaching SFM also, who is teaching SFM, etc. Suppose I am not clear with any point of stock market, so where you will go? To SFM faculty. Got it now? So let us understand what AS5 says about ordinary activities. Do you know what is ordinary activities as per AS5? Anyone? Fast. What are ordinary activities? Bolo, you have done AS5 now. What are ordinary activities? Which are not? Which are not extraordinary. What are extraordinary? ये तो कितना मजा आया in CA Inter. Let me give one example. Let's see whether you have understood AS5 or not. I'll just ask you one example. If that is correct, means example wise, so you know. Compensation paid to employee on voluntary retirement. You know voluntary retirement? Use compensation paid to employee on voluntary retirement. Ordinary, not ordinary. Huh? Means extraordinary. Means you are saying OE. Extraordinary. How many are saying ordinary? How many are saying ordinary? Huh? In CA, the minority always wins. And ordinary is correct. It is an ordinary activities. It is not extraordinary activities. Correct? Means, chalo theek hai, whatever we have done in CA Inter, let us forget, come to CA final. So what is ordinary activities? If I give you the exact definition, what was given, where? AS5. If you want to write down, write down. If you don't want to write down, then also write down. Ordinary activities as per AS5. Any activities which are undertaken as a part of business, as a part of business, or which are incidental to business, which are incidental to business, which are incidental to business, correct? Which are taken, which are undertaken as a part of business, or which are incidental to business. Now, when you are paying compensation to employee, it is incidental to business only. Therefore, it is an ordinary activities. There are some examples of ordinary activities can be exceptional in nature, and therefore separate disclosure required as per AS5 also. Means ordinary item can be exceptional due to its nature and amount. That is other point, but this is the definition of ordinary activities. But once again, when coming to India, the ordinary course of business is not defined anywhere. So I will say it is a subjective term, depends upon management judgment. Depends upon management judgment. But I will take one question. I would like to take one question. Let us come to that question only. Question number 2. This question was asked in CA final old syllabus. CA final old syllabus. Night Limited sells beer to customer. You know beer? You don't know? Whatever you know, I also don't know. Night Limited sells beer. There is some item known as beer to customer. Some of the customer consume the beer in the bar. You know bar? Run by Night Limited. So there are some company which run bar in night. Therefore, the name of the company is Night Limited. Correct? You might be knowing bar. You don't know, leave it then. We are in question. Suppose there is some bar where some items are sold. That items are known as beer. For this. While leaving the bar, means once they leave the bar after drinking beer, correct? The consumer leave the empty bottle in the bar. Of course, they will leave only. They will not take to the home. You also they were to. You will take or you leave. अरे बोलना yes or no? You leave. देखो उसको पता है नालायक. The consumer leave the empty bottle in the bar and the company takes possession of these empty bottles. And the company takes possession of this empty bottle. So now empty bottle are under the position of Night Limited. Very good question. The company had laid down a detailed internal record procedure of accounting for these empty bottles. So from this sentence it is understood that the value of empty bottle is not immaterial because detailed accounting has been done. So it is not immaterial, it is material. Correct? So the company has laid down a detailed internal record procedure for accounting of these empty bottle which are sold by the company, by calling for tenders. Means they will call tenders and then they will sell the empty bottles. Normally it happens, correct? Keeping this in view, decide whether the stock of empty bottle, stock is a general term. So when they are saying stock of empty bottle, it does not mean it become inventory, correct? Stock of empty bottle, stock means group of item. When we say stock means group of item. I think you know employee stock option shares, employee stock option plan na. So stock means group of shares. Their stock means what? Group of shares na. Therefore the name came stock. But stock we say inventory. Understood? So stock does not mean inventory. Understood? So stock of empty bottle is an asset of the company. First they have asked whether stock of empty bottle is an asset. If you say yes, if you say no, they will not give marks. Reason, explanation need to be given. So how many are saying yes, it is an asset? How many are saying it is not an asset? Not an asset. How many are saying not an asset? Why not an asset? Arey Baba, for asset, I am saying it is an asset. I am not saying about inventory. Asset means two condition. Control, it is under the position of, now whether customer will come and demand empty water in the morning. In the morning they will say, Acha, I forgot my empty water there. Let's go there. Even though they came, they will not give na. Correct. It means it is under the control. So ownership is not important. Control. It is under the control of the company. Under the control of the company, and of course future recurring benefit because it can be sold. So two conditions satisfied, therefore it is an asset. Therefore it is an asset. Apply definition. Don't apply CA enter. Huh? Apply definition. Understood? So it is an asset. No doubt that it is not an asset. It is a asset only. So point number one is clear. Coming to point number two, if so means if it is an asset. If so means what? If it is an asset, whether the stock of empty bottle existing as on the date of balance sheet is to be considered as inventory of the company and valued as per Ind AS 2, or to be treated as a scrap and shown at realizable value with a corresponding credit to other income. Means what they are saying, if it is an asset, whether it will be inventory and apply Ind AS 2, or let us consider it as a scrap and will value at realizable value. Means they have given two options, inventory or scrap. What do you think? How many are saying yes, it is an inventory? How many are saying it is not an inventory? So balance what they are saying. Once again I am saying those who are not participating, what will happen in exam also you will not participate. You will be confused. You need to answer. Already I have given the definition. Apply the definition. Let us apply definition. Whether it is an asset, held for sale, these two to match na, held for sale. In ordinary course of business, in this doubt will come. In ordinary course of business, how many are saying no? Raise your hand. Explain. अरे 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 अरे. How many are saying it is an ordinary course of business? Can you explain? One minute. Everyone will say I can't understand. Okay. This is a CA market, not vegetable market. Okay. So everyone don't say. Raise your hand. I will only ask. Bol. Bol. Incidental. Yes, it is incidental to main business. Every time it happens, my father is a grocery dealer, wholesale dealer. So when I was kid, I used to just go to my shop and I used to see that they are also selling the jute bag in which rice will come. So rice to retail shop 1 kilo, 1 kilo, 1 kilo. The jute bag will be empty. Then there will be lot of jute bag. They will call some person and sell jute bag. Whatever amount will come, will do party with that. But it is available for sale in ordinary course of business only. This is an ordinary course. Correct now. It is an ordinary course. Therefore, it is an inventory. It will be an inventory. And what will be applicable? Ind AS 2 will be applicable. Same answer has been given by IC also. But one doubt will come. So if Ind AS 2, then what is cost price? What is cost price? Cost price will be 0. Cost price will be 0. Correct? And NRB may be 1 rupees for one bottle. So 0 or 1, whichever is, means can I say it will be disclosed as inventory but at rupees 0. So there is a practical understanding that whenever the value 0 will disclose at nominal value. Means will disclose at rupees 1, means suppose there are 1000 bottles. So the value become 1000, NRB become 1000 and the cost price become 0. So value become what? 0. Whenever this is the practical understanding says, it will disclose at what? Nominal value. Nominal value means 0 or 10, sorry, nominal value means 1 rupees or 10 rupees or 100 rupees. like this, correct? I hope you understood nominal value from AS, which is AS12, government grant. In grant also we have used the word nominal value, remember, correct? So same thing. So there is a practical understanding. If the value of asset, if the asset exists, but if the value is 0, we'll disclose that nominal value for disclosure purpose. Otherwise, how to write down inventory in the balance sheet, correct? So at nominal value. Have you understood this point? Have you understood this point? The answer is given, you can write down here. Such inventory will be will be will be measured at, yeah, will be valued at nominal value, as the cost price will be 0. So such inventory will be disclosed at, you can add on in this way, will be disclosed at nominal value, better disclosed right now, will be disclosed at will be disclosed at nominal value as cost price is 0. You are asking about ordinary activities. No, 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 one condition, oh my god, why this doubt is coming? Held for sale in the ordinary course of business, so finished goods only, it is understood, right? On or baba, or, got it? Meaning you understood, correct? Now, one more discussion is required as per the meaning is concerned. If I will not discuss, then it will not be a final level discussion. Material or supplies. Now, when I am saying material, you know there are two type of material. One is direct, one is indirect. Costing. Raw material is always direct. Now the question arises whether indirect material inventory. Suppose we are using what? Coal to generate fire for production purpose. Understood? We are using coal to generate fire for production activities. Correct? So coal is consumed in the production process. It is a indirect or direct? Direct. I'll come and indirect or direct? Indirect na. I am assuming you know costing because I don't know costing. I will not teach direct material, indirect material. So coal is an example of indirect material. Now the question arises whether coal is inventory. Yes or no? Yes. So can you say here material will also include indirect material, direct and indirect material. So what is held for consumption in the production process? So not only raw material, also it will include indirect material. But let me ask you one more question if you have understood this much. Can I ask? You are not responding. Now, if I am saying material, so there are two type of material that you know. One is direct material, one is indirect material. Whenever we say raw material, normally it means what? It means direct material. And for this there is no doubt Ind AS 2 will be applicable. But indirect material can be of two types. One can be held for production and one can be held for what? Distribution. Held for distribution. Correct? Now, suppose this is chocolates. You can see this is chocolates. Inventory is to inside it, na. Chocolate is inside it. This is known as primary packing. This is primary packing, correct? This is also primary packing, huh? This is also primary packing. Without this, it cannot be sold. Are you understanding what I am saying? This is also primary packing. Now, production happened. Production done. It is ready for sale. But to sell, it need to be transported from factory to warehouse. So what we'll use cotton, and we will store there, and cotton becomes secondary packing material. Secondary packing material, na. This is primary. This is primary, yeah. Secondary, you understood? Cotton, understood? I hope you are understanding. So can I say primary packing material? Primary packing material is one example which I held for production. Can you say primary packing material is required to make the inventory held for sale? Without that, it cannot be sold. I hope you are understanding. So this is what primary packing material will come here. Now held for distribution, can I say without secondary packing material, it cannot be distributed. It cannot be distributed. The secondary packing material. Have you understood this point? Have you understood this point? Correct. Now my question to you all, whether for primary packing material Ind AS 2 will be applicable? Yes or no? Yes or no? And for secondary packing material, whether Ind AS 2 will be applicable? Yes or no? Are bolo yes or no? You are saying yes or no? Yes or no? Doubt aa gaya na? When we are discussing, doubt is coming. If we will not discuss, doubt will not come. Let us read the definition. What is the point number 3? Which are held in the form of material or supplies to be consumed in the process of production, not for distribution of that production. Understood? It means it should be held for production purpose, not for distribution purpose. Therefore, can I say in this case, Ind AS 2 is not applicable. Ind AS 2 is not applicable. Correct? Are you able to understand? Means the principles of Ind AS 2 will not be applicable, but this will be stock of packing material, which will be an asset. I am not saying it is not an asset. It is an asset, but it is not. It will not meet the definition of inventory. It will not meet the definition of inventory. I am not saying it is not an asset. It is an asset, but it will not meet the definition of inventory. Understood? Have you understood this point? Correct. So now we completed the definition of inventory. I hope you are understanding. We are taking much time in the definition only. Each and every point we are discussing. Got it? Definition of inventory is covered. Now coming to point number 2, valuation of inventory on reporting date. Can I say the objective of this chapter is to value inventory on reporting date? Value inventory on reporting date. Just try to understand. Whenever we do recognition and measurement, there are two types of recognition and measurement. One is known as initial recognition, then subsequent recognition and measurement. Initial recognition means on the date of purchase, and subsequent recognition means on reporting date. Subsequent recognition on reporting date. Can I say initial recognition, inventory will be always initially recognized at cost price, and subsequent recognition will be done at what? Cost price or NRV, whichever is lower. So when we do subsequent recognition, what is the valuation principle? Cost price or NRV. NRV means what? Net realizable value, whichever is lower. Market price is not equal to NRV. Fair value and NRV are also two different terms. Fair value is not NRV. Fair value is not NRV. We'll discuss what is fair value somewhere else. But fair value and NRV are two different terms. Market price and NRV are two different terms. NRV means NRV, net realizable value. Correct. So whichever is lower. Why lower? Due to which concept? Due to which concept? Conservatism. Due to conservatism principle, cost price NRV, whichever is lower. Now it means we need to understand what is cost price, what is NRV. Let us come first to cost price. So first let us understand cost price. For that we need to understand what are the component of cost price. When I say component, means what is included in cost price of inventory. So there are three component of cost price. There are three component of cost price. So whenever, everywhere, what are the three component? So when we say cost price, so normally I will say manufacturing or non-manufacturing organization. When I am saying non-manufacturing, it will include both trading and service organization. Correct. So for manufacturing organization, there are three components. What are three components? One is known as cost of purchase. Cost of purchase. Cost of purchase. But what will purchase? What will purchase? Raw material. The cost of purchase of material. Correct. Then plus what? Cost of conversion. Cost of conversion. The conversion cost incurred for converting raw material into finished goods. Okay. Then it will also include some other cost. What is other cost? We'll discuss. Other cost. So there are three components for inventory related to manufacturing organization. Correct. But for non-manufacturing, can I say it is only cost of purchase? Nothing more than that. Cost of purchase of stock in trade. Correct. Means here purchase. What we are purchasing? Stock in trade. Stock in trade. We'll purchase and then we'll sell it. Have you understood? Correct. This point you understood? Now when I am saying cost of purchase does not mean purchase price. When I am saying cost of purchase does not mean purchase price. Means it will include other cost also. I hope you are understanding. So we need to now understand what is cost of purchase, what is cost of conversion, what is other cost. Let us discuss. So coming to cost of purchase. So cost of purchase means invoice price. Invoice price. Invoice price means the price mentioned in the invoice. Simple. Any price mentioned in the invoice, that become invoice price. Correct. Less any trade discount or rebate. We know that trade discount or rebate will be deducted. So any trade discount or rebate will be deducted. Plus any non-refundable duties and taxes. So any non-refundable duties and taxes means what? Any import duty or any GST which has been paid for which what is not available? Credit is not available. If suppose input credit is available, then it will not be added. Then it will not be added. Simple. This point also you know. So any non-refundable duties and taxes for which credit is not available, plus any directly attributable expenses to bring the inventory in present location. Present location means stock in trade will be brought where? In warehouse directly. Raw material will be brought where? In factory. So wherever you are bringing it, the cost of bringing will be also added. Can you give me some example? The direct expenses to bring the inventory in present location? Freight. Freight na. So can you say carriage of freight? Inward, inward. Any loading, unloading, any more? Hmm? बोलो. Any toll tax paid, octroi, I think you know that. Any tax paid for entry, correct? Any more? Insurance in transit. Any insurance in transit? Insurance in transit I am saying. Insurance of premises I am not saying. Insurance in transit, correct? Understood. So can you see these are the some direct expenses to bring the inventory in present location? Direct expenses to bring the inventory in present location, all will be added. So this become cost of purchase. This become cost of purchase. Understood? Correct. Now I am saying trade discount means can you say will not deduct any cash discount? Cash discount will not be deducted. You know cash discount, trade discount. What is the difference between cash discount, trade discount? Hey, raise your hand now. Raise your hand. Raise your hand. Started saying. हाँ बोल. Trade discount will be based on always quantity. Generally, even though if I am purchasing one item, I can't get trade discount. हाँ तो बोलना depends. Trade discount depends. Correct. बोल दे. Cash discount depends on and it does not depends upon management policy. Without management policy, cash discount will be given. What is this, Ray? Everything depends upon management policy only. Everything depends upon management policy. There should be policy for trade discount as well as cash discount. Facilitate a payment. I will say yes. Okay, I am okay with your answer. Simple. I will say, chalo theek hai, whatever you know correctly only. I'm just saying simple. Any discount of whatever nature given on trade date on the date of transaction is trade discount. Understood? And any discount of whatever nature is given on settlement date. Settlement date is cash discount. Simple word. Understood what I am saying? Any discount of whatever nature is given on trade date is trade discount. Any discount of whatever nature given on settlement date is cash discount. Understood? Means can you say on the transaction date we don't know about cash discount and therefore we cannot deduct because we need to recognize purchase. So at that time we don't know about cash discount. At that time we don't know about cash discount. Therefore only trade discount will be deducted. Trade discount and rebate are more or less same. Rebate is given to specific customer. Trade discount is given to all customer in general. For example, he said that any person is purchasing bulk quantity, so he will get rebate. Then we use the word rebate because that is not given to all customer. So any discount which is given on trade date to only a specific customer, a special customer, then become rebate. So trade discount rebate are more or less same as per accounting is concerned. As per accounting is concerned, correct? Therefore deduct trade discount or rebate, but do not deduct cash discount, correct? Understood. So cost of purchase you have understood. Means can I say when I am saying cost of purchase, it is cost of purchase of raw material for manufacturing organization. It is the cost of purchase of stock in trade for non-manufacturing organization. Means if non-manufacturing overdone, this is the cost price. But for manufacturing, to find out cost price of finished goods, we need to add some more cost. We need to add some more cost. So we need to add what cost of conversion. So there are two costs of conversion. One is known as what? Direct labor. One is known as what? Production overhead. You know about direct labor? I'm not discussing direct labor. You know about production overhead? Overhead you know. What is the meaning of overhead? Production overhead? Production overhead means indirect material, indirect labor expense, indirect manufacturing cost. So any indirect cost related to production become production overhead. Correct? So indirect material, indirect labor, indirect manufacturing cost become production overhead. But you all know that this production overhead are of two types. One is variable overhead, one is fixed overhead. Variable overhead and fixed overhead. So can you see this variable overhead and fixed overhead should be allocated to each unit of production? We need to allocate it. You have done allocation in your costing subject, but I am not teaching you costing. I am teaching you what? FR. Correct? My question to you all, everyone, whatever cost price you calculate in costing subject and whatever cost price we are calculating in FR subject are same or different? Have you understood the question? Question समझो. Try to understand. Whatever cost price we are calculating in costing subject and whatever cost price we are calculating in FR, whether they are same or different. Why different? Because different subject. Eh, I just want that you just raise your hand so that I can understand who are participating. Because now only one person is raising. What is this? In crowd to everyone. Oh, then I am asking, raise your hand. No one is raising hand. Well, costing is budgeted. Very good. One sentence answer over. I understood the emotions. There is no need to describe much. I have understood that he knows about costing subject. And in interview it happens. Interview they will ask question with one sentence. They will understand whether you have done articleship or you have not done articleship. Whether you are dummy holder or you have done some work or not. With one simple. Costing means always estimated, means cost price is calculated in costing subject based on some estimation before production. But in accounting, cost price is based on actual data on reporting date once the production has been done and actual cost has been incurred. Cost price for FR is for disclosure purpose. Costing subject to find out sale price, we find out what? Cost price. Understood? The objective are different, intentions are different, but the component remains same. Component of cost price in costing subject and FR subject remains same. Components are same, but objectives are different. Means in costing subject we have calculated estimated cost, but in FR we are calculating actual cost. Correct. So can you say in this case variable overhead will be allocated based on actual production? Based on actual production? अरे बोलना रे, variable overhead will be allocated to each unit on the basis of actual production. On the basis of actual production, that is given, allocated to each unit on the basis of actual production. I think no doubt about variable overhead. No doubt about variable overhead. Coming to fixed overhead. Coming to fixed overhead. This question have been asked in CA final level. Let's see how you react. You are not supposed to read till I read because interest will be over. Interest will be lost if you read before I read. Correct? Understood. Fixed overhead. Let us assume the total fixed overhead is 10 lakh. Correct? And normal production. You know normal production? Normal capacity? In costing you have the normal capacity. Normal production. So normal production is 10,000 units. But actual production can be different. Actual production can be different. So actual production can be equal to normal production. Or actual production can be more than normal production. Or actual production can be what? Less than normal production. Quite possible. Correct. Now there is no doubt about variable overhead because variable overhead will vary according to actual production, and therefore it will be allocated to each unit on the basis of actual production. But production overhead, this fixed production overhead do not vary according to actual production. Correct? It remains same irrespective of production level. Now the question arises, in these three different cases, it will be allocated based on actual production or normal production. बताओ. In this case, what will do? 10 lakh divided by normal production or actual production, बताओ. In this case, 10 lakh divided by what? In this case, 10 lakh divided by what? Means we should divide by actual production or normal production. Huh? Actual or normal? In first case, actual, because actual and normal are same, both are same. So even though you are saying actual or normal, I will not be able to understand what is the right answer, because it is also 10,000, it is also 10,000. Both will give what? Rupees 100. In the second case, but the actual or normal? अच्छा, in the third case बता दो. 5 marks question have been asked at CA final level. ICAI knows what you don't know, and they will ask question from Indians too, and मजा आएगा. Question will be very easy, but what they asking that you should know. Inventory chapter question we do not expect also they will ask from Indians too, and they have asked two time question from Indians too in last 5 attempts. Last 5 attempts, 2 time at CA final level. Will you accept institute asking question from Indians too? You will not revise only before exam. Indians too. From foundation we are doing 5 marks question. Every marks count. Marks is very important. 1 marks is very important. You ask those students who score 199 out of 400. You ask those students who score 59. You ask those students who score 39. Understood? They will know the value of 1 marks. Each marks matter. Each marks matter. And if you are not able to write properly this question, 5 marks lost. But very simple question. This is a question of what? CA inter level, not CA final level. Correct? Now, just try to understand. Fixed overhead. Already I have said, everyone just try to understand. Already I have said, it does not based on actual production. Therefore, it should be allocated based on normal production. Means, in this case, it will be normal production. In this case, also it will be normal production. Why? Now you must be asking, so why normal production? Why normal production? बोलो पूछो. Why? Because you will not leave me, I will not leave you. Correct? Oh, sorry, my mistake. क्या लिख दिया? This is 6. हाँ ठीक है, okay. 10,000. This is correct. 10,000. So this is coming how much? 100. It means, can you say how much we are including in the cost price of inventory? So it means 7,500 is the actual production into 100 means 7,50,000 will be included in the cost price of inventory, and 2,50,000 will not be included in the cost price of inventory. Why? Because can I say this 7,500 we have achieved means, can I say there is some abnormal loss due to our inefficiencies, and abnormal loss should not be included in the cost price of inventory because it is due to the inefficiency of management. Understood? Therefore, that will be charged to profit and loss account immediately. You can't recover anything from customer which is due to your inefficiency. Understood? Therefore, can I say abnormal loss you know from bachpan? Abnormal loss will not be included in the cost price of inventory. That will be charged to profit and loss account as an expense immediately. So again is the balance 2,50,000. Balance 2,50,000 will be transferred to PL as what? As abnormal loss. This point have you understood? Can you see in first case no doubt? In third case no doubt? Correct. Now coming to the second case. Coming to the second case. Right now I have said if fixed overhead should be allocated to each unit based on normal production. Now if I don't right now, if I allocate 10,000, suppose if I allocate by dividing by 10,000, what will happen? Let's see. Then can you see it become what? How much? 100. Then it become 12,000 into what? 100. It become 12 lakh. Can we allocate more than our actual cost? No. We cannot allocate more than actual cost. Therefore, what India 2 says, it is a rare circumstances where actual production is more than normal production. In this case, fixed overhead will be allocated based on actual production, not based on normal production, because we cannot allocate more than actual cost. We cannot allocate more than actual cost. However, in your costing subject, they always says based on normal production because there is no actual production. Understood? In costing subject, your costing teacher will always say based on normal production. They will never use the word actual production because it is estimated always there. I hope you are understanding. And this case is rare circumstances where actual production is more than normal production. It is a rare but not impossible. Correct? So it is a rare circumstances, and what Index 2 says in this case, divide by what? Divide by actual production, not normal production. Have you understood this point? It means what is coming? Check karo. How much 10 lakh divided by 12,000? 83.33. Now you will do 12,000 into 83.33. It will be equal to 10 lakh only. Means can we make a rule? Allocation will be done based on normal production or actual production, whichever is higher. A rule from examination point of view. Allocate fixed overhead based on actual production or normal production, whichever is higher. Rule from examination point of view. Understood? Have you understood? Not understood? बोलना. Have you understood? पक्का? चलो. Good question from examination point of view. Can we proceed? Yes, sir. We can proceed. So you can see written allocated to each unit on the basis of normal production or actual production, whichever is higher. Whichever is higher. So now you have understood what? Cost of purchase. You have understood cost of conversion. Cost of conversion means direct labor and production overhead. Production overhead two types: variable overhead, fixed overhead. Variable overhead based on fixed overhead based on actual production or normal production, whichever is higher. Whichever is higher. Correct. Coming to other costs, what Index 2 says, there may be some other expenses, means once production over, production done, but then also to bring the inventory in condition of sale, there may be some other expenses, for example packing expenses or some modification expenses as per the specification given by customer. Correct. Now I went to purchase some furniture some few days before. So furniture was okay, but I asked him to just modify as per my requirement. So it was held for sale, but can I say to sell to a specific customer, some modification required. So that modification expenses will be a part of cost price. Will be a part of cost price. So any expenses which are incurred to bring the inventory in condition to bring the inventory to condition eligible for sale will be considered as other cost, and other cost will be also part of cost price of inventory. For example, packing cost, for example, transportation cost from factory to warehouse. Factory to warehouse. Transportation cost from warehouse to customer will not be included, but from factory to warehouse to bring the inventory in condition of sale. to bring the inventory in condition of sale, and modification expenses. Understood? Correct. Coming to the last point of this, what are excluded from cost price? Means simple, what is not included are excluded. Correct. Understood? So what are excluded? Administrative expenses. You know what are admin expense. Okay. Selling and distribution expense. You know selling and distribution expense. Abnormal loss. You know abnormal loss. Correct. Understood? Storage cost unless it is necessary for production. Means there can be two types of storage cost. What one is which is necessary for production process, one which is not necessary for production process. For example, if I say storage cost of raw material, necessary, not necessary, necessary, therefore it will be included. But storage cost of finished goods, not necessary, therefore it will not be included in the cost price of inventory. Once it is ready for sale now, then whatever expenses you are incurring, that will never be part of cost price. Once it is ready for sale, once it is ready for sale. Got it? Yes, sir. Borrowing cost. How Ind AS 2 is silent regarding borrowing cost. Means Ind AS 2 does not say anything about borrowing cost capitalization. But for borrowing cost, we have a specific Ind AS 23 coming soon. And you know about AS 16. You have done AS 16? What AS 16 says that if any asset is a qualifying asset, then borrowing cost will be, otherwise it will not be capitalized. So can you say inventory can be also qualifying asset? Whether inventory can be a qualifying asset? Huh? Yes or no? What is the meaning of qualifying asset? Which takes substantial period of time for getting ready for use or sale. So sale means inventory only now. So inventory can be also qualifying asset. We'll do detailed discussion where under Ind AS 23, not now. The inventory can be also qualifying asset as per the requirement of Ind AS 23 coming soon in your life. So subject to Ind AS 23. We'll discuss about borrowing costs in detail in Ind AS 23. Can I leave this right now? But you can write down, if qualifying asset, then included in cost price. If not qualifying asset, then excluded from cost price. Understood? But this is based on Ind AS 23. Ind AS 2 is silent regarding this. I hope understood. For this chapter, I will do all the question at the end, because questions can be done once you have understood the entire chapter. Can I ask one question if you have understood this? Whatever question I'm asking, think and say. One attempt, huh? You have only one attempt. And that attempt is your last attempt, not first attempt. Because when you say first attempt, the second will come, huh? Always say this is my last attempt. When you say this is my first attempt, so your mind says second need to come. So always think this is my last attempt. One life, one attempt, one marriage. Understood? Correct? Understood? Chalo. Now, the question is that whether depreciation will be included. Depreciation expense, you know? Whether depreciation expense will be included in the cost price of inventory. Yes or no? Yes or no? Anyone saying yes? Anyone saying yes? Follow. Anyone saying yes? Means one thing is clear, that you have not done costing subject. What? Yes, you have not done costing subject. No, bata. I have given so much time to you. Please, 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 please listen. I was silent for 2 minutes. I was just thinking whether you are saying yes or not. And if you have not said yes, and if you know yes, and then also you are not saying yes, then I will say go from class. If you know correct answer, and if you are not answering, it is worst situation from examination point of view. If you know something and if you are not answering, I will say, what is the use of then knowing the answer? And if you are not responding, means you are not confident. I was just giving time so that you can respond. And once I said you don't know costing subject, then you are responding, yes sir, depreciation will be included. What is so? Just try to understand. What I want to say, that answer even you don't know. And if you are not answering, if you know, then worst situation. Please change. Otherwise, ICI will change you. Don't give chance to ICI. Change yourself. Whatever I say, that is 100% correct. Only one teacher in India who will say like this. Who will say like this. No other teacher will say directly like this. This is a fact. And you need to accept it. This is a fact, you need to accept it. In our class, everyone is not going to pass. But in our class, many of you will pass in the first attempt only. Correct? You decide what you are supposed to do. Understood? One attempt. Got it? Now, if you are saying no, means one thing is clear, that you don't know costing subject. I have said costing FR are different from objective, but component remain same. And in production overhead, you have included depreciation of plant and machinery. You have included. And if you have forgotten, go and ask your costing faculty. Depreciation of those assets which are directly engaged in production activity will be included in the cost price of inventory. Will be included in the cost price of inventory. Depreciation of plant and machinery which is directly engaged in production purpose will be included. Depreciation of furniture will not be included. Then depreciation of office building will not be included. But depreciation of plant, depreciation of factory, etc. will be included, because that is required for production purpose. Understood? Correct. Similarly, whether amortization of intangible asset will be included. There may be some intangible asset which is required for production purpose. For example, in my case, I am producing recorded classes. The sale of recorded classes will be my inventory. Will be my inventory now? Recorded classes. For recorded classes, I am using some software. So whether amortization of software will be included in the cost price of that inventory? Yes. Yes, it will be included. So depreciation and amortization, depreciation of property, plant and equipment, and amortization of intangible asset will be included if such assets are directly related to production activities. Correct? If you want to write down, write down. Write down somewhere here only after giving a note. Depreciation and amortization expense will be included. Depreciation and amortization expense. Depreciation and amortization expense will be included in the cost price what I said will be included in cost price if such asset are directly related to production activity. If such asset are directly related to production activity. Got it? Done. Now we have understood now cost price, three component. Now we can calculate cost price given if questions all the informations are given. Correct? Now before coming to questions, let us discuss with some special case. Point number A, joint product and byproduct. Do you know joint product? Do you know byproduct? I hope you all know about joint product and byproduct. Correct? Nothing to explain. Correct? Now, can you say whenever two or more than two product is produced from a single production process, then it becomes joint product. So can you say we are incurring a joint cost? So joint cost will be allocated to joint product on some rational basis, on some systematic basis. So Ind AS 2 has given two rational basis. Either of that can be used. Correct? What they have given. Joint cost is allocated on the basis of sales ratio of each joint product either at a time of split off. I hope you know at a time of split off. Costing subject, there was one chapter joint product. Correct? Or on completion of production. This both method you have done in costing subject. But I think in costing subject they have given 5 methods. So other 3 are bakwas. Will not discuss from Ind AS point of view. These two are rational method in the ratio of what? In the sales ratio of each joint product either at the point of split off or on completion of production. Means what they want to say. Suppose there is one input. Suppose input is X and after incurring some cost of conversion, this was split into what? Y and Z. So this become what? Point of split. Point of split. Understood. Now if Y and Z can be sold in this condition, then we can find out a sales value of Y and Z, and on that sales value the entire joint cost will be allocated. But it is quite possible that at this point of time Y is not sellable in the market. Therefore, can I say we'll do some further processing? We'll do some further processing and Y may become A and Z may become B. Are you getting? So if at the point of split off sales value cannot be determined, so one more method of allocation has been given that find out a sales value on completion of production, and that sales value will be the ratio of allocation. That sales value will be the ratio of allocation. But can you say this information will be given in the question? All you need to find out sales value. In that sales value we'll allocate. We'll get the what? Cost price of each product. Correct? What is byproduct? Joint product, I think no discussion required. It is very simple. But what is byproduct? Incidental to main product means what you want to say? What do you want to say incidental to main product? So this Y and Z is also produced during the process of production. Incidental to production only. For example, let us take an example. The milk is what? Milk is what? Raw material. From this will produce what? Butter, ghee, and what? Buttermilk. You know buttermilk? What we say in Taj. In Telugu, what we say? Huh? Sure, Jovi. Butter, ghee, and buttermilk. Now, from the primary PC, what do you say? What is byproduct? What is joint product? In this, huh? All are joint product. Means there is no byproduct. Buttermilk is what? Byproduct. Buttermilk, you are saying byproduct, and these two are what? Joint product. You are saying like this? So leave it. Everyone, as per the accounting purpose, I don't know what you have done in costing because I am not teaching costing subject. As per accounting subject, what accounting standard says, if the value of any product is insignificant, then it becomes byproduct. Understood? If the value of any product is insignificant compared to the other product, then it becomes what? Byproduct. Means we need to find out the value of which product is insignificant as compared to other product, then that product will be byproduct. So suppose if I say this value is insignificant, then it is byproduct, and then it becomes these two are joint product. But if suppose the value of buttermilk is not insignificant, then all are what? Joint product. All are joint product. Means insignificant value of any product, if there is insignificant value of any product, that product will become byproduct. And can you say if the value is insignificant, so it becomes immaterial? Immaterial, then we are not supposed to apply the valuation principle. And therefore, Ind AS 2 has given some relaxation for their accounting. Now, Ind AS 2 says that for that, cost price should not be determined. We should measure it at NRV only. So, any product which is byproduct should be measured at NRV, and that NRV will be deducted from the cost price of main product. Means the sales value of byproduct will be deducted from the cost price of main product. Means some relaxation has been given for the accounting purpose. There is no need to find out the cost price of this. There is no need to apply Ind AS 2 on byproduct. Simply find out NRV and deduct from the cost price of main product. Understood? Have you understood? Have you understood? From examination point of view, can I say they will inform you that this is byproduct? If they will not inform us, how can we understand? So from examination point, don't worry, they will inform us that this is byproduct. Understood? So what Ind AS 2 says? Byproduct, if the amount is immaterial. Understood? If the amount is immaterial, it must be measured at NRV. It will be measured at NRV, not at cost price or NRV, whichever is lower, only at NRV, and deducted from the cost price of main product or joint product. Got it? Have you understood? Have you understood this? Let me take one question based on this. This is a question. Same question was recently asked in exam. The same question was asked at CA Inter also. I will say this question was first asked at CA Inter, then asked at CA Final. Level you understood. First they have asked where, and then they have asked where. However, from my point of view, this is not a question of CA Inter, because there is one point where every CA Inter student will be confused. But if you are also confused, then you are equal to CA Inter. Are you able to understand? From my point of view, this question should not be asked at CA Inter level. Recently, they have asked same question at CA final level. Let's see whether you are doing correct or not. In a manufacturing process of Visual Limited, one byproduct BP emerged beside two main products MP1 and MP2 apart from scrap. Achha, accounting treatment of scrap is similar to byproduct. However, scrap and byproduct are two different items. Accounting treatment of scrap and byproduct will be same. Means scrap will be also recorded at NRB and deducted from cost price of main product. Accounting treatment remains same, but both are different items. What is difference between scrap and byproduct? Means scrap are not byproduct, huh? Scrap means remains of byproduct means what? Fixed asset you are saying. I am saying production process. I am not saying about property, plant and equipment. I am not into India 16 right now. In the production process, there will be some scrap also. There will be some byproduct also. There will be some joint product also. What is the difference between byproduct and scrap? Useful life. What is useful life? I am not asking about. Arey Baba, you went to depreciation chapter. Because you just give me poison. Usefulness. What is usefulness? So I will not ask. Scrap means what? It is not sellable to the end customer. Byproduct is sellable to the end customer. Buttermilk, there is a market. For scrap, there is no market. There is only scrap market. This is the difference. Means buttermilk can be sold in the market. I think you have purchased Amul buttermilk. Correct? So that can be a byproduct. It can be sold to the end customer, but scrap can be sold only in scrap market. Scrap market. Understood? This is the difference. So, okay. Now, I hope you have understood MP1, MP2, MP1, MP2 and BP. So, you can see raw material, this they have given wages, fixed overhead, variable overhead. Whenever in question normal production is not given, always will assume normal production and actual production are same. Correct from examination point of view, understood point. Then they have given output MP1 6250, MP2 5000, BP 1600. Closing stock as on 31st March 2012 800 200. Average market price of MP1 and MP2 is 80 and 50 per unit respectively. Can you see this has been given? So this is the sale price at the time of split up. So this can be used for allocation purpose, but the sales value will be used, not sale price. Sale value means number of unit produced multiplied by sale price. Byproduct is sold at 25 per unit. There is a profit of 5,000 on sale of byproduct after incurring separate processing charges of 4,000 and packing charges of 6,000. Rupees 6,000 were realized from the sale of scrap. Calculate the value of closing stock of MP1 and MP2 as on 31st March 2012. Only one point, if you understand, then it is very easy. Otherwise, it is very difficult question. I just come to that point. My question to you all, what you will do about this point? There is a profit of 5,000 on sale of byproduct. Understood my question? If this sentence you understood, then this is very simple question. If this sentence you have not understood, then you will do some mistake in exam. CA inter level, this is a difficult question because they will not be able to understand this point. And this question was asked at CA inter level. CA inter is more dangerous than CA final. Have you done this question at CA inter? I think everyone have done. If you have done, बताओ what you have done about this point. There is a profit of 5,000 sale of byproduct. Deduct from cost. What is the cost? Sale value minus 5,000. I am saying what you will do about this 5,000. Ignore. 5,000 deducted from the cost price of main product. Cost price of main product. Huh? Bolo, you are confused or not? Most of you are confused. Now you only say whether this question should be asked at C enter level. No. From my point of view, this question should not be asked at C enter level. Correct now? If you are confused, तो आपको CA इंटर तो अभी recently they passed what foundation, they are coming to inter, from them they are asking this question. बताओ, not fair. Anyone who can say? Ignore. You know the how much you will find out a cost price of byproduct. You will use it to calculate the cost price of byproduct. NRV. चलो छोड़ दो. However, I got the answer with some of you. Some of you I got the answer, and some live students also said correct. Ignore. It should be totally ignored. Already I said in the class that for byproduct we don't calculate cost price. We'll measure at NRV. NRV means sale price minus selling expense. Means profit should not be used. Already I have given the answer. The byproduct means not at cost price, at NRV. So why you are calculating cost price? Means this is only given to confuse you. Only given to confuse you. However, this is actually not at all required for solution. Not required for solution. But super dangerous point. CA inter student will not be able to do. They will consider it somewhere. Correct? Write on ignore. Ignore this point. Why? Because for byproduct we don't want cost price. For byproduct we want only NRV. Now it becomes very simple. Now let us do the solution. You can see first they have calculated NRV of byproduct. NRV means what? Sale price less then processing expenses. Whatever is given. The selling price of byproduct is this 40,000. 1600 into 25 has been given. Less separate processing charges 4,000, packing charges 6,000. So this become NRV of what? Byproduct. You can see 5,000 was not used. Then we will calculate the joint cost. Joint cost raw material 1,60,000, wages 82,000 given, fixed overhead 58,000 given, variable overhead 40,000 given. From this we will deduct what? NRV of byproduct already calculated. From this also will deduct NRV of scrap. So NRV of scrap 6,000. Total become 36,000. This become joint cost 3,04,000. Now this 3,04,000 will be allocated in the sales ratio of sales value ratio of two main products. So we need to find out allocation ratio. We need to find out what? Allocation ratio MP1, MP2. Output they have given 62,505,000. Sale price they have given 80,50. So what is the sales value? 5 lakh and 2,50,000. So what is the sales ratio? 2:1. In this ratio, this 3,04,000 will be allocated, and you can see this and this amount will come. We'll divide by the total output. Divide by total output. We will get cost price per unit. Cost price per unit. Then they have given closing stock unit. Stock of closing stock unit is 800 and 200, because here cost price is more than sales price. Therefore, it will value at cost price only. Correct? So you can see multiplied by this. This becomes the value of closing stock. Super easy. 5 marks question. But one disturbing point. This is CA final. They will try to confuse you with only one point. If you can understand the emotions of that question, this is very simple. Otherwise, some mistake will happen. One mistake, 5 marks will become 1 mark. 5 marks will become 1 mark or 0 marks. One mistake you are doing. And that you need to understand. Have you understood this point? Simple question or not? But if you ignore 5,000, if you consider 5,000, so some mistake will happen. Definitely some mistake will happen. Correct. This question have been also asked in CA final exam. So can I conclude you have understood joint product and byproduct? Next point. Deferred settlement term. This is totally new point. AS2 is silent regarding this. AS2 is silent regarding this. Deferred settlement terms. Deferred settlement. Everyone. Whenever we purchase, just try to understand. Either we'll purchase on cash immediately, or it will be deferred payment. Deferred payment means credit. Deferred payment means credit now. Correct. Suppose when you are purchasing at cash, so you will pay the normal purchase price. Normal purchase price is 1000. So what journal entry you will do? Inventory account debit to bank or cash, whatever. 1000. In Bachpan we used to say purchase account debit to bank. Correct now. Purchase account debit to bank. But inventory is okay now with you. Or should I write purchase? Bolo, should I write purchase or inventory is okay with you? Purchase inventory are same na? Purchase account and inventory account. Achha, can I ask one question? Because you are saying no. Can I ask one question? Purchase. Purchase account everyone know, huh? Purchase account everyone knows or not? Means I think accounts start with purchase account and sales account. Correct? My question to you, a purchase account is a real account, nominal account or personal account? And I hope you all know real account, nominal account, personal account. Huh? Don't ask me what is nominal account, what is real account. Golden rules you know? Huh? So purchase is a real account, nominal account or personal account? Nominal account? Huh? Everyone saying nominal account? देखो, then don't change after that, huh? Anyone saying purchase account is not a nominal account? Huh? Who is saying? So one student is saying real account. Anyone is saying real account? Two students joining together. Join product. Sorry, yeah, don't. Only jokes, huh? Two students are saying what? A real account. Anyone saying real account? Chalo. So because they are exceptional, I need to ask them only. Why it is a real account? I have not asked rules, Baba. Based on rules, we don't define the nature. Based on nature, we define rules. If it is a real account, then rules is applied. We don't first frame the rules. The nominal account expense debited, purchase account debited. What is this? Based on rules, we don't find nature. Based on nature, we find out rules. You are going reverse. Huh? चलो ठीक है. मतलब I can't say anything on this. He is completely wrong. But purchase is a real account. Purchase is not a nominal account. Understood what happened? What I have done? Whatever you have done, from my point of view, that was not correct. And totally rectification. Totally rectification. CA foundation में तो you have been, your entire knowledge was like this, and because of that reason sometimes CA become complicated. CA become complicated because of that reason. And I don't know, because this type of question will not be asked at exam level. Whether they will ask purchase real account at CF and never. But interview, someone can ask. And if you say purchase is not a real account, purchase nominal account, they will say bye bye. They will not ask second question. They will not ask third question. They will say bye, go, come again after 6 months. Understood? What is real account? Can anyone explain? Don't give me the rules, huh? What is real account? This so I am expecting you will give me correct answer. What is real account? Huh? Related to only asset. Who is saying this? Who said related to asset? Correct, Drake, bol. No confidence only. Huh? Which is not closed at, and personal account will be closed. Personal account will be closed. What is this, Ray? Chalo, I am giving you 1 day. 1 day time I am giving. Ask anywhere where you can ask this question. Search the entire Google Baba and give me the correct definition of real account. Understood? I am giving you 1 day. Then I will come to purchase account. Okay? I am giving you 1 day. You can ask chartered accountant. You can ask your CA, any senior in your family, any relative, any girlfriend, any boyfriend. Huh? ठीक है? Okay? चलो 1 day I have given. I am not, but I am giving 1 day. I am giving 1 day. 1 day I have given. Okay. So even though you have given me correct answer, I am not responding right now because I am not getting confidence. I am not getting confidence. Okay. Okay. Now, can you see inventory can be written? Purchase and inventory are same. Purchase account and inventory account are same. Inventory account debit to bank. You can write down purchase account also. If you want to write down purchase account. But at final level, we can write down inventory account. Now, deferred credit, can I say this can be of two types? This can be of two types. First, when credit period allowed is equal to normal credit period. Have you understood this point? Normal credit period. Can I say in every business there is some normal credit period? When I say business, so business is a group of entity who is doing similar type of business. Industry. Correct now. So basically in an industry, credit period is already defined. And that become normal credit period. And can I say we give credit to increase our turnover? We give credit to increase our sales. My question to you all, suppose 30 days is the normal credit period. 30 days is the normal credit period. So will you sell at 1000 or will you sell at more than 1000? Huh? I hope you are understanding my emotions, whatever I am saying. Right now I am not into accounting, I am into business. Think from businessman point of view, not from accountant point of view. Correct? Accountant and business are different, na? So what I am saying, I want to increase my sales and therefore I am giving normal credit which is in that industry. So will I charge 1000 or more than 1000? Huh? If you charge more than 1000, anyone will come? No one will come, Baba. No one will come. You are saying you want to increase your sales, whether anyone will come? No one will come. They will say I am going to other market. Just try to understand. I say credit period allowed is equal to normal credit period. So as per the custom of trade, this will be also at normal purchase price. I'm not saying that you can't charge more than 1000. You can charge. But as a customary business, I am saying you can charge whatever you want, you can charge, but the customer will only not come. I hope you are understanding. So normal purchase price, and this will be also equal to 1000. Means can I say this both are same? So here also the journal entry will be inventory account debit to payable. Now it is payable. Correct now? I am doing journal entry from the point of buyer because inventory is here. Not from seller. Seller will go to India's 115. This point you have understood. But sometimes customer demand more credit period. Suppose they want credit for 1 year, so that is more than normal credit period. The seller will not say no. They will say yes only. Correct now. So in this case, suppose credit period allowed is more than normal credit period, let us say 1 year, and let us say market rate of interest is equal to 10% in that business. Let us assume market rate of interest is 10%. So batao, how much will be the sale price? How much will be the sale price? Can you say the sale price will be 1000 plus 10% means 1100? 1100? No doubt about this, because we are into market, and of course in this case because customer demand a higher credit period, so we can recover market rate of interest. It can be less than market rate of interest, that is depends upon the relationship. Understood what I am saying? Customer and seller relationship. But let us assume normal transaction, so it will be 10%, so it become 1100. And can I say in invoice, my question to you all, in invoice sale price will be 1100. Ki sale price will be equal to 1000. What do you think? Sale price will be 1100 or it will be 1000? Huh? But Nalayak, have you seen any invoice where interest is added? Never. It gives a negative impression. No invoice, you will never see any invoice where interest will be added. You will say I will charge 1100, but you will not discuss about interest. If you are discussing about interest now, they will say, "Arey, interest leta." Interest is a negative term in the market. For example, right now, suppose you came to me, you say, sir, I will give at the end of the batch. So of course, I will charge something more. We will not charge because we are into this business. In this business, interest nahi aata. But suppose I am a pakka businessman. So I will say, okay, the fees is this. You give me 15,000. You will be ready also because you don't have money right now. Are you able to understand? But in invoice, will I write down this plus interest? Never. I will say sale price is 15,000. Correct? It means invoice, the sale price will be 1100 only. If you found any invoice with interest, please give me that invoice. You will not find any invoice with interest. One note will be written that interest will charge on late payment. That is something different topic. Have you understood this point? This point. Now my question to you all, in this case, what will be journal entry? Means inventory should be debited at 1000 or 1100. 1000 ki 1100. You are saying 1000. What you are saying? 1000 or 1100. How many are saying 1000? How many are saying 1100? Correct. So 1100 is correct, but as per AS2. 1000 is correct as per Ind AS 2. Now accounting will become discounting. Understood? So now Ind AS 2 says that if there is a deferred settlement terms, then cost price of inventory will be equal to the price, or we can say present value of all future payment, or we can say at normal purchase price at normal credit terms. Purchase price at normal credit terms. So purchase price at normal credit terms is how much? 1000 only. So it means inventory will be debited at 1000, not 1100. Correct. So inventory account debit 1000 to payable how much? To payable how much? 1000 only right now. Right now 1000. Means can you see we have recorded this at what? Of present value of 1100. Correct. And now at year end, suppose this journal entry was done on 1/4/2020. So year end 31st March 2021, journal entry will be interest expense account debit to payable how much? 100. And you can see now the total payable become how much? 1100. This is nothing but whatever we have done in provision, unwinding of provisional amount. This unwinding means adding interest to the present value. Adding interest to the present value. So total payable after 1 year will become 1100, and that will be paid. Have you understood this point? So this is new point in your life. Important from examination point of view. Important from examination point of view. Till now, no question have been asked from this topic. Can be asked. Have you understood? Deferred settlement terms. Simple. Concept is not complicated. It is simple. Let us read. If inventories are purchased on deferred settlement terms, if inventories are purchased on deferred settlement terms, purchase price for normal credit terms will be the cost price. Purchase price for normal credit terms means purchase price at normal credit will be the cost price. It is nothing but present value of all future payment. Present value of all future payment. Means in this case we need to also calculate interest. Interest will be deferred settlement amount means future value minus what? Present value of future payment. That will be the amount of interest. And again, this interest will be recognized as an expense over the period of credit. Over the period of credit means 2 years. So over 2 years. Over 2 years. So this will be recognized as an expense over the period of credit and will never be added to the cost price of inventory. Means this interest will never be added to the cost price of inventory. Correct. One example I have taken. Let's see. A Limited purchase inventory at rupees 60 lakh on 1/4/2016 on 2-year credit, which is more than normal credit period. 2-year credit, even though this point is not given, it will be always more than normal credit period, even though question is silent. From examination point of view, whenever they give rate of discount, now we'll always assume discounting need to be done. Correct? Have you understood this point? Correct? Yes, sir. Rate of interest for similar transaction is 10%. Calculate cost price of inventory and past journal entries. What will be the cost price of inventory? Cost price of inventory will be present value of 60 lakh for 2 years at a discount rate of 10%. So 60 lakh multiplied by 0.8264, it become 49 lakh 58,400. This calculation you can do, huh? You have calculator, you can do it. Correct. What will be journal entry? Journal entry on 1/4/2016, purchase account debit to creditor. Purchase account debit to creditor, this amount. Correct. Then at year end 31st March 2017, interest expense to creditor. So we have done 10% of this. 10% of this. Then second year 31st March 2018, once again interest expense to creditor, and can I say last year interest will balance sheet figure to remove differences that you can calculate. Last year means 60 lakh minus this two. 60 lakh minus this two now. So that amount will come. So last year always calculate as a balancing figure. This amount can be calculated because there may be some approximation difference. Correct. Then creditor becomes 60 lakh, it will be paid. Creditor account debit to bank 60 lakh. Means can I say in India we are giving more importance to substance, not agreement. Even though agreement says sale has been done at 1100, that is bakwas for us. Substance is that purchase cost is what 1000 and interest is what 100. Are you able to understand? So we are giving more importance substance over legal document, and invoice is a legal document. Invoice is a legal document. Got it? So Ind AS is totally based on substance. AS was not totally based on substance. Have you understood? Can we take break? Yes, sir. We'll take a break of 10 minutes. ओके 10 सेकंड है, तू आया 10 सेकंड बाद। अभी अभी चल। Can we start once again, everyone? Everyone. Now, so of course, what in days 2 inventory we started. I hope you are understanding how I am processing the chapter. Correct? Now, the last point was deferred settlement terms. Any doubt in that? Uh, 1 second, can you 1 second do that? Whose mobile? Your mobile? What a ringtone. Why you put this type of ringtone? Huh? Ah, enjoy. मजा आ रहा है ना? Let us all do maja together. So can you put 1 second? 1 second. Let us enjoy है ना? चलो. What was the music? Ta 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 ta. चलो ठीक है. Okay. Now coming to next point. Point number C. Cost of agricultural produce harvested from biological acid. Once again, AS2 is silent regarding this point. New point. Now the entire topic is new. Agriculture produce harvested from biological acid. Biological acid. Have you noticed what is biological acid? Biological, biology, biology acid. Biological acid. So biological acid is nothing but living animal and plant, excluding human being. They say human being are worse than what? Animal. So they will not come in this category. So biological acid means living animal and living plant. Living plant. There are two type of plant. One is non-living plant, plant and machinery. Plant and machinery is what? Non-living, na. So we are discussing about living plant, living animal. Correct? And agriculture produce harvested from biological acid. Harvested means, everyone just try to understand. Okay, let me draw one plant. Now this is plant. This is plant. अरे बोलो yes or no? living plant, and this is what? This looks like mango. Whatever, there is something hanging. So this is what agriculture produce. Now this is a biological acid. Now for biological acid, Ind AS 41 is applicable. For biological acid, Ind AS 41 is applicable, coming soon in your life. Correct. Now agriculture produce before harvesting, Ind AS 41 is applicable. Means for these also Ind AS 41 is applicable. Correct. Now at some point of time this agriculture produce will be detached from biological acid. So we need to find out the point of time of harvesting. Harvesting means the detachment point, when we detach that produce from biological acid. Detailed discussion in AS 41. Correct? Understood? So suppose at this point of time it is detached. Correct? So now this become agriculture produce at the point of harvesting. The agriculture produce at the point of harvesting, once again Ind AS 41 will be applicable. And Ind AS 41 says agriculture produce at the point of harvesting will valued at fair value, not NRV. NRV and fair value are different. What is fair value? We'll understand. NRV will do discussion here only. Correct? Are you able to understand? So what Ind AS 41 says that this agriculture produce at the point of harvesting will be measured at fair value less cost to sell. Fair value less cost to sell. प्यार से will call it FVCS. Fair value less cost to sell. Now what is fair value? What is cost to sell? We discuss where? Under Ind AS 41. Are you able to understand? So it's suppose it is 100. Now once it is harvested, so this mango or whatever you assume will be held for sale or held for consumption. So we'll meet the definition of inventory. At the point of harvesting, Ind AS 41 is applicable. Once harvested, it will become inventory, either held for sale or held for consumption. So can you say this agriculture produce harvested agriculture produce is nothing but inventory. It means inventory. So Ind AS 2 will be applicable at each reporting date. Ind AS 2 will be applicable at each reporting date. Now Ind AS 2 says at each reporting date the valuation should be done at cost price or NRV, whichever is lower. So it means it will be cost price or NRV, whichever is lower. NRV we can calculate as per the requirement of Ind AS 2. NRV we can calculate as per the requirement of Ind AS 2. The question is that what is the cost price? So one clarification has been given. The cost price will be equal to was this. Understood? The cost price of such harvested agriculture produce will be equal to fair value less cost to sell at the point of harvesting, as per which Ind AS? Ind AS 41. So can you say to apply Ind AS 2 on such agriculture produce, one clarification has been given. The cost price will be equal to fair value less cost of sale at the point of harvesting. Once again this topic will be covered where? Under Ind AS 41. Right now this much only. But I hope you have understood. Have you understood this much? Detailed discussion Ind AS 41. Where? Ind AS 41. Done? Bolo. Okay, what is written? As per Ind AS 41, agriculture produce at the point of harvest are measured at fair value less cost to sell. We'll call it say in our class FVCS. Whenever I am saying FVCS, it is fair value less cost to sell. Correct? This is the cost price of such agricultural produce for the application of Ind AS 2. So this fair value less cost to sell will become cost price by applying Ind AS 2 requirement. This much. Done? Correct? Yes, sir. This also we have understood. Coming to the next point, NRV. NRV very simple at each reporting date. We need to estimate NRV. Can you say we need to estimate NRV for all three items? All three items is what? Finished goods and stock in trade, raw material and WIP. Because all are inventories. All are inventories. So first, for finished goods or stock in trade, very simple. NRV is estimated selling price minus estimated selling expense. I think no clarification required. Suppose 100 is the estimated selling price and we need to pay some commission to commission agent for sale for making such sale. So suppose commission is 10 rupees, so NRV become 90 rupees. So this 90 rupees will be compared with cost price to find out value of inventory. I think no clarification required. For WIP, what is the NRV? So for WIP, one formula has been given. The formula is what? NRB is equal to estimated selling price minus estimated selling expense minus estimated cost to complete. Have you done this formula in your CA Inter for WIP? Yes or no? I hope you have done because questions are asked. So estimated selling price minus estimated selling expense. One question from my side. This is selling price of finished goods or WIP? Estimated selling price of finished goods or WIP? Finished goods, not WIP, because WIP cannot be sold. WIP cannot be sold. 100% correct. It is the estimated selling price of finished goods which will be produced from that WIP. Correct? Understood? Estimated selling price of finished goods which will be produced from that WIP less estimated selling expense of finished goods which will be produced from that WIP. So can this become NRB of finished goods? And from the NRV of finished goods, we will also deduct estimated cost to complete. So this becomes net realizable value of WIP. I think no explanation required. So suppose this is 100, this is 10, this become 90, and estimated cost to complete that will be given in the question. Suppose that is 40. So what is the NRV? NRV become 50. And this 50 will be compared with the cost price of WIP. Cost price of WIP. We can compare. No doubt. No doubt. I think no explanation required. One doubt. For agriculture produce? Ah, ah, cost of? Dekho, please. I said detailed discussion will be done where? In days. Once harvested. I said harvested agriculture produce in days 2 is applicable. So already that cost is incurred now. Correct now. Now we'll ignore. Understood? Correct? Yes, sir. Now, this have you understood? Any doubt in this? I am into this point right now. Any doubt in this? Bol. Correct. Now, coming to raw material. Raw material. Now, just try to understand. Can we find out NRV of raw material? Can we find out NRV of raw material? No, we cannot find out NRV because it is not, it cannot be sold. It is not held for sale. It is held for consumption. So we cannot find out NRV of raw material directly. Understood? We cannot find out NRV of raw material directly. Correct? Now, what is the objective of this valuation principle? Means why they have given cost price or NRV which is lower? The objective is that to find out expected loss on sale of finished goods, now, or stock in trade. And if there is an expected loss on sale of finished goods, then provide such loss. Provide such loss as an expense. This is the objective of this chapter. Means we need to find out expected loss on sale of finished goods. We never sell raw material. Correct? But can I say finished goods will be produced from that raw material only? So what in AS2 and AS2 says that first find out that the finished goods in which raw material will be incorporated. Means suppose you have some raw material. So you are valuing this raw material. Suppose these are raw material. Correct? These are raw material. Understood? Right now it is not used, consumed. It is in the hand. Correct? Now from this raw material, suppose this will be produced. Correct? So this is your ultimate goal. So you will find out the finished goods in which this raw material is incorporated is expected to be sold at what price? Means once again we are finding out a sale price of finished goods, not the sale price of raw material, because we cannot find out a sale price of raw material. Can we find out a sale price of raw material? No. Understood? So we'll find out the finished goods in which raw material will be incorporated is expected to be sold. Either equal to or more than cost price of finished goods. Means either it will be expected sold at more or equal to cost price of finished goods. Can I say if it can be sold at more than cost price, it means expected profit. Expected profit means no write down, no provision required, no expense need to be recognized. What is the objective of this chapter? Objective of this chapter is to provide any expected loss on sale of finished goods. So if you are expecting to sell finished goods at profit, it means value raw material at cost only. There is no need to write down the value of raw material. Understood? So in this case, value raw material at cost price of raw material. Understood? Have you understood this point? Have you understood this point? अरे बोलना रे. And if it is expected to be sold at less than cost price of finished good, means expected loss. Expected loss. Can I say expected loss can be due to many reasons? Can be due to many reasons. Expected loss on sale of finished good can be due to many reasons. It can be competition, it can be recession in the market. अरे बोला रे. Or it can be decline in the price of raw material. Means suppose I purchase raw material at higher price and now the price of raw material declined. It means my competitor is using raw material at lower price, but I have already purchased at higher price. I hope you understood. It means I am forced to sell at lower sale price now. Are you able to understand this point? So what Ind AS 2 says that it can be, means one of the reason for this loss can be decline in the purchase price of raw material. Decline in the purchase price of raw material. Therefore, in this case, value raw material at lower of its cost price and replacement cost. Replacement cost means what? Current purchase price. Current purchase price means at what price it can be purchased on reporting date. Current purchase price. Then value raw material at lower of its cost price and replacement cost. Understood? I hope these two situations have you understood? Have you understood these two situations? To explain this situation, I will take one question. Come to question 21. 21 come. Very good question. I have taken this question from international book. Okay. A Limited uses single raw material that convert that into finished product. During the current period, the cost of production and sales are as follows. During the current period, can I say when I am saying during the current period, means these are the information during the year, not at reporting date. In days to information required at reporting date, not during the year. Correct? Whatever information given might not be used for your solution, might not be useful for your solution. Correct? So during the current period, raw material 3 units at rupees 80 means 3 units is required to produce 1 unit of finished goods. 3 units of raw material is required to produce 1 unit of finished goods. Into 8, 24. Cost of conversion 26 means what is the cost of production? It is 50 and the selling price is 75. On the balance sheet date, oh, अच्छा ये बात. There is a steep fall in the price of product 45 means from 75 it become what? 45. Correct? Because of competition and steep fall in the material price, raw material price. Currently, material can be purchased at rupees 4 per unit. Means this become replacement cost. This become replacement cost. On balance sheet date, there were 1 lakh units of raw material in stock purchased on 31st March 2004 at a cost of rupees 5 per unit. But they are saying there were some raw material which were in stock which were purchased at rupees 5. Means the cost price of such raw material is rupees 5. Correct? Understood? You are required to value inventory as on balance sheet date. Correct? This is the question. What do you think? We should value raw material at cost or replacement cost? 5 or 4? 5 is the cost price, 4 is the replacement cost. So at 5 or 4? 5 or 4? How many are saying 5? How many are saying 4? And balance? Means good question. Mixed answer we are getting. But let's see. Let's see. Everyone. What India says. What India says. We need to find out the sale price of finished goods in which this raw material will be incorporated. Which raw material? Which was purchased at rupees 5, not at rupees 8. Means can I say there may be some raw material during the year which was purchased at rupees 8. Now 8 fall down to 5 and then 5 fall down to 4. Correct? So we have purchased some raw material which is available in our stock at rupees 5. So it means we need to find out cost price of finished goods which will be produced from inventory which were purchased at rupees 5. So what will be the cost of purchase? Cost of purchase will be 3 into what? 5. Bole yes or no? Not 3 into 8, 3 into 5. So it becomes 15. Cost of conversion will be equal to same 26. Nothing has given about changing cost of conversion, so we'll take that only. What is the cost price of finished goods? It become how much? 41. And what is the expected selling price? 45. And can I say it can be sold at more than cost price? So will you write down the value of raw material? No. It means we should value at 5 or 4? 5. So those who have said 4, prima facie you think मजा आ रहा है 5 or 4 whichever is lower, but you'll get अंडा. This is final level, हाँ, final level. जो दिखता है होता नहीं, जो होता है वो दिखता नहीं. Correct? Understood? So prima facie, of course, if I will also not read the question carefully, I will also say 4. But you need to read the question carefully. Correct? And that is given the solution. You can read the solution. You will be able to understand. Have you understood this point? So you need to first find out the cost price of finished goods which will be produced from the raw material which were purchased at rupees 5. Then compare with the sale price of finished goods on reporting date. And then analyze your answer. Got it? Have you understood this point? This type of question is not given in ICAI study material. I have taken a good question to explain this point. That on MRQ must revise question. Got it? Understood this point? So with this we completed what? NRB also. So we have understood cost price. We have understood what? NRB. Cost price understood, NRB understood. Now we need to compare. On which date? Reporting date. Comparison you can do. But before that, how to determine expected sale price? Means for NRB we want sale price. For NRB we should determine sale price. So how to determine sale price? So one guidance has been given for this. Now everyone, we have understood one thing, that NRB is not equal to what? NRB versus fair value. Market price is one example of fair value. Market price is one example of fair value, means fair value is a wider term and market price will be one example of fair value. Correct? So when I am saying fair value, it will include what? Market price. But NRB and fair value are two different terms. Why? Because this NRB is based on entities conditions. Based on entities conditions. Means we find out NRB based on entities conditions. See at what price it can be sold by entity. Correct. But fair value is calculated based on market condition. Market condition ignoring the entity's specific restriction. Means fair value is based on market condition, not based on entity's condition. This is the difference between NRB and fair value. For fair value, for measurement of fair value, we have a separate Ind AS. Ind AS 113. Ind AS 113 deals with the measurement of fair value. So to find out fair value, to measure fair value, we need to go to which Ind AS? Ind AS 113. The detailed discussion about fair value will be done under Ind AS 113. But NRB, how to determine NRB, that is given under Ind AS 2 only. That is given under Ind AS 2 only. Have you understood this point? Are you able to understand? The fair value is based on market expectation and condition. NRB is based on entities specific conditions. Correct? Yes, sir. Now, NRB we have understood. NRB means what? Estimated selling price less estimated selling expense. Very simple. But the question arises, sir, how to estimate this? How to estimate this? So one guidance has been given under Ind AS 2. Let me take one example to understand how to calculate this. Now, everyone, suppose on reporting date there were 10,000 TV in our stock. Correct? Got it? So we are here to value this. We are here to find out cost price. The cost price, let us assume 10,000. Let us assume 10,000. Correct. Now out of this 10,000 TV, 2,000 TV, 2,000 TV are under a contract to sell. Means there is a binding contract. There is a binding contract before what? 31st March. Means contract has been done for 2000 TV. Contract has been done but control is not yet transferred. So control is not yet transferred means sale is not recorded. So even the contract done to sale, but it is not a sale because control is not transferred. I hope you are understanding. It might happen a contract has been entered before 31st March, but till now control is not transferred. It will remain inventory only. So can you say from this contract we can find out a sale price? Because in contract sale price will be mentioned. And suppose the sale price given in this contract is 12,000. 12,000. So can you say for this 2000 TV, what is the NRV? NRV become 12,000. For this 2000 TV, not all TV. For this 2000 TV, because these are under a contract to sale. Under a contract to sale. So can you say for this cost price is equal to 10,000, and let us ignore selling expense right now. Let us once ignore selling expense. So NRV become what? 12,000. Therefore value become what? Value become 10,000. Understood this point? Have you understood this point? So out of 10,000, 2,000 is valued, coming to balance 8,000. Balance 8,000. Now balance is what? How many TV? 8,000 TV. So how to find out NRB of this? Now what happened? Out of 8,000 TV, 6,000 TV were sold before what? Before date of approval. DOA means what? Before approval of financial statement. Have you understood? Now I am relating Ind AS 2 with the discussion whatever we have done under Ind AS 10. Already under Ind AS 10 I have taken this example. Before approval of financial statement, out of 8,000 units, 6,000 units were sold. So can I take this sale price as estimated selling price on reporting date? So this will, suppose it was sold, suppose this was sold at rupees 10,500. Suppose this is my assumption. So for this unit, we'll say cost price is equal to 10,000 and RB is equal to 10,500 and value is equal to what? 10,000. Have you understood? So out of 8,000, 6,000 valuation done, balance is 2,000. Means this balance 2,000 is still not yet sold till approval of financial statement. Correct now? It is not yet sold till approval of financial statement. So for this, what Ind AS 2 says, he will do fair estimation, means will take fair estimation by management. Fair estimation by what? Management. Means we need to ask management only at what price it can be sold. At what price it can be sold. And suppose management says it can be sold at rupees 9,000. Let us assume. Don't ask me why. Management says. Okay? So let us assume management says कि now it can be sold at rupees 9,000 only. So this become NRB for this balance 2,000. So cost price is equal to 10,000 and NRB is equal to 9,000. So this will be valued at what? This will be valued at 9,000. Have you understood? Means this will be 10,000 into how many units? 2,000 units. This is 10,000 into how many units? 6,000 units. This is 9,000 into how many units? 2,000 units. Understood? This become value of inventory. I hope this point now you have understood how to determine estimated selling price. Estimated selling price. In the revised ICAI study material, for the first time, they have given question of this type. For the first time, believe me, dangerous question, huh? Dangerous question. It looks simple, but if you don't know the concept, it is dangerous. Have you understood? For the first time, they have given a revised ICAI study material, means expected a question from this topic. Expected a question from this topic. But have you understood? Got it? I think clear. That is only given. Check karenge. What is given? First preference will be given to binding agreement on or before reporting date. First preference. If that is not available, then second preference will be given to sale agreed before approval of financial statement. Second preference. Third preference will be given to what? Is last preference, fair estimation given by management. So this is the order to find out expected sale price of NRV. Got it? Correct? Done. This also done. Coming next point, cost formula. This though what I will say, from my point of view, discussion not required. From foundation level we are doing this. Cost formula, you know FIFO, first in, LIFO and WAP. LIFO is not applicable in India. LIFO we don't use now. We use either FIFO and better. LIFO is not acceptable in India. So AS2 was also silent about LIFO. Ind AS2 is also silent, means Ind AS2 says we will not use LIFO. Same thing is given. Now for cost formula, why we are finding cost formula? To find out cost price per unit. How to find out cost price per unit? Correct? Understood? So cost formula, there are two types of inventory. Some inventories are of the nature which are not ordinarily interchangeable, and there are some inventories which are ordinarily interchangeable. Generally, when I say inventories which are not ordinarily interchangeable, these are expensive items. For example, if I say aeroplane, we are doing manufacturing of aeroplane. So can I say aeroplane, whatever we are manufacturing, that will be as per the specification given by each customer? Means will not do now. Let us construct aeroplane and then we'll say it is quite impossible. Means for every customer, the design of aeroplane will be different. Understood? So these are expensive items. For example, jewelry. Can you say, even though if you are into ornaments business, gold ornaments, so every ornament will be different as per the specification given by the customer. Correct now? So this basically is for which item which are expensive in nature. Now what is expensive? That is not defined. Huh? So simply which are not, means one item of inventory cannot be interchanged with other item of inventory. Therefore, we cannot apply weighted average. We can't say now cost price will be weighted average. Correct now. For example, furniture manufacturing. So each furniture will be different for as per specification. So we can't do average costing there. Therefore, for that we use specific identification method. Specific identification method means you need to find out the cost for each unit specifically. Cost for each unit specifically, and that we call unit costing also. We call it unit costing. If for each unit find out the cost. For each unit find out the cost. That is known as specific identification method. Means for each unit find out the component and then add it, and that will become what? Cost price of each unit. Done. Then inventories which are ordinarily interchangeable means similar inventories which are homogeneous in nature, similar in nature. For example, if I am saying batteries, so we will not produce batteries one by one now. It will produce in what? Large quantities, and one batteries will be similar to other batteries, and it can be interchanged. It can be interchanged. Understood? So these are there. For that, they have given 2 points. What they said, if the actual cost can be determined, then use two valuation formula. One is FIFO and other is weighted average price method. Now you know FIFO, I'm not going to do any question on FIFO. You know weighted average price method, I'm not going to do any questions on this point. This assumption I will take that you know FIFO and weighted average price, I can't do question based on this at CA final level though. Correct. But I hope you have understood that if actual cost can be determined, then we'll use either FIFO or weighted average price method. But there may be circumstances where actual cost is not determinable. So if actual cost is not determinable, then we cannot apply FIFO, we cannot apply weighted average cost price method. So you have two options. Either you have two options. What? Either to leave or measure. So can we leave the valuation of inventory? No, we need to measure it. Therefore, some technique has been given by Indians too. Whenever actual cost is not determinable, whenever actual cost is not determinable, there should be some techniques for valuation. So what they said, whenever actual cost is not determinable, then we'll use some approximate cost method. When actual cost is not determinable. Understood? Means if actual cost is determinable, then the FIFO and weighted average. And if it cannot be determined, then go for two techniques given by Indians too. One is known as adjusted selling price method, one is known as standard costing. I hope you know standard costing. Standard costing is totally based on some estimation based on what? Normal efficiency level. Standard costing you have done, na? Huh? Where you have done? In costing subject, therefore I will not teach you what is standard costing. That is not a part of this FR syllabus. But can you see standard costing has been given for which organization? Manufacturing organization. And adjusted selling price has been given for which organization? Trading organization. Trading organization. Now to apply FIFO and average price method, weighted average price method, can you see we need to keep stock record? Without keeping the records, we can't apply FIFO, because for FIFO we want opening balance, purchase, then how much sold, that information is required. But normally what happens for a retail business, normally they don't keep stock records because it is not possible to keep stock records, because there will be not one item, there will be many 1000 items. For example, if you went to Big Bazaar, now it is closed, but if you went to Big Bazaar, so many items are there. But because these are big entities, they have used some application to maintain the stock. But there are some small businessmen, they can't keep record for that. Now they will count the stock at the end of the year and then they will do valuation. Correct now. So for that purpose, they have given some relaxation. We can use adjusted selling price method. In this method, I think you have done this point in CA Foundation. You know what is adjusted selling price method? What they said, first you find out units of closing stock on reporting date. Correct. Multiplied by sale price. So can you see this becomes sale price of closing stock? This becomes sale price of closing stock. Correct. And from this we will deduct profit margin. Profit will be deducted. So can you sale price minus profit is equal to what? Cost price. So this will become cost price of closing stock. This is the indirect way to find out cost price, but this is not actual. This will be approximate cost. Are you able to understand what I am saying? First find out units of closing stock multiplied by sale price. Then normally in retail business, the sale price will be uniform and the gross margin will be also uniform. So we know the margin that we deduct from the sale price will get what? Cost price of closing stock, and this cost price will be used for the valuation purpose. These are the techniques given. Have you understood this point? Correct. Write down. Refer question number 4 by your own. Question number 4. This is very important question. You will be able to understand now. Got it? This also you have understood? Chalo. This is only a revision I am doing. This is actually everything done at CA inter level. I think so. Correct. Let me complete this chapter fast because I can't give much time in this chapter now. Comparison of NRB and cost price. Very simple. NRB will be compared with cost price at which date? Reporting date. Now the question is that on which basis? So what India says that item by item basis means comparison should be done on item by item basis. Correct. However, group basis can be applied if circumstances require. What is group basis? Group basis means what? Hmm? Group having similar item. Very good. Excellent. Means group basis means what? Having similar items. Similar item. For example, can I say rice is, suppose in a grocery shop, rice is one item, but rice will have many categories. Do you know the categories of rice? Huh? Any categories? I'll छोड़ना यार. छोड़ना. XYZ बिरयानी, दम बिरयानी, मसाला बिरयानी, गोभी बिरयानी. चलो. XYZ. Correct. Understood? And suppose there is one more item wheat. Please, please, please. This happens when I teach this type of chapters. Now you started talking. Let me come to then next. Tomorrow I will start what? Directly financial instrument chapter. Give me some time, please. Huh? If you start discussing, it means you are not taking interest. Can I start important chapter now? This is also important, huh? अरे question पूछा ना रे. PQR. Now, what is item by item basis? Whether they are saying rice is one item and wheat is another item, ki X is one item. So item by item basis means we need to do in this way. This is the first preference. X is a different item. Y is a different item. So comparison should be done on item by item basis. But suppose, because item by item basis may be complicated. So what they have given some relaxation. If we can have a group of similar item, then we can do group basis also. So rice can be valued separately, wheat can be valued separately, but we cannot combine rice and wheat together. Rice and wheat cannot be combined together. Rice is one group, wheat is one group. Understood? Correct. So group basis if circumstances require. Otherwise we cannot use group basis also. Understood? Chalo. This also you have understood. This comparison you are expert. Point number 9 and point number 10 is totally a new point. Totally a new point means AS2 was silent. Now if you can give me 7 minutes, then I will take, otherwise I will stop right now. Thank you very much. Thank you very much. Okay. So I want 7 minutes silent. Remain silent. Okay. Now, reversal of write down. Reversal of write down. So first I need to explain you write down. Then I will come to reversal of write down. Have you understood write down? What is write down? Huh? Have you understood write down? Yes, sir. You have understood. Let me take one example. Are you writing all examples now? You are not writing. Don't write. Now suppose this is 31st March 2020, 31st March 2021, 31st March 2022. Correct. And suppose this was the date of purchase. You purchase one inventory at rupees 100. This become cost price. Now valuation will be done at each year end. Let us assume this inventory remain unsold every year. It was unsold. It was unsold for 3 years. Quite possible. Quite possible now. Correct. Now at first year end, we'll compare cost price with NRB. Suppose 95. But what is the value? Let us make 90. What is the value? Value is equal to what? 90. How much write down? How much write down? 10. This write down will be expense. This write down will be expense and this will be debited to PL. This will be expense now and expense will be transferred to PL. Any doubt in this? 90 will come in balance sheet, 10 will go to PL as an expense. Any doubt? No doubt. The second year, once again, we'll do comparison because it remain unsold. So once again, we'll compare cost price with what? With what? NRB. And NRB will be reassessed. We'll do reassessment of NRB. NRB may change. Now suppose NRB become 95. NRB become 95. Quite possible. Quite possible. Now value is equal to, please. Which mein mat bolo. Don't say. When I am saying now, don't say. I will ask, then you say. Disturb because sound is coming from there also. I require use concentration. What do you think? A teacher require concentration or they don't require concentration? We don't come by mugging up everything. Na? Means the last batch I have done, now I am teaching right now. So I need to recall all the points with what is supposed to be said in the class. I need to recall na. If I miss some point, whose loss? Your loss. So please, I require concentration because sound is coming from above. Value 95. Correct? Value 95. Now, batao. In this case, when we are comparing last carrying amount was 90 and now it become 95. So actually it is increased by 5 rupees. Carrying amount has now increased from 90 to 95. So this 5 is known as what? Reversal of write down. Reversal of write down. Now the question is that this reversal of write down will be an expense or income. It will be an expense or income. Huh? It will be expense or income. How many are saying income? Everyone is saying, but not correct. Reversal write down is neither expense nor income. It is reduction of expense. Understood? Income means when you are saying income means it goes to revenue from operation and other income. No. It is not income. It is not at all income. It is reduction of expense. So this is known as reduction of expense. Can I ask one basic question? Basic question. Because sometimes what I teach, you may think something other. So I need to clear that point also. My question to you all, this expense of rupees 10 will be debited, means will be considered an expense of which year? Which year? First year? First year? Correct. Now in the second year there is a reduction of expense. So this reduction of expense will be recorded in which year? Year 1 ki year 2? Huh? Year 2 na? Thank you very much. This reduction of expense of the year in which reduction occur. In which reduction occur. Means we will not go to the previous and change that na. Simple. Basic question I have asked. Sometimes doubt happens. Now the last point. Cost price is 100. 1 second it remains unsold. 1 second comparison. 1 second NRB reassessment. NRB may change. Now it become 105. Quite possible. Quite possible. There was a recession in the market due to COVID lockdown. Lockdown over. Now demand increases. Now so demand means I am saying now public is in the market only. 2 years they have not purchased anything. Now they are purchasing only. Correct? Every market is full. Correct? The market demand suddenly increases. Suddenly increases. Quite possible situation or not? Quite possible. Batao. Value is equal to what? 100. Batao. Last year it was 95. Now it become 100. So how much increase? Means can I say reversal cannot be more than previous write down? Means you can reverse to the extent of previous write down. Because if you are reversing more than previous write down, it is against conservatism. Then so you are valuing at higher than more than cost price. Correct. So reversal cannot exceed previous write down, and this will be also reduction of expense. Understood? This is reduction of expense, not income. This is the key word. Question will be asked from that point. This is reduction of expense, not income. Have you understood? Have you understood this example? Got it? I hope you have understood. Not understood? Last point, cost price NRV, whichever is lower. The value is equal to 100. Higher ki lower? Lower. The previous carrying amount was how much? This carrying amount is how much? How much increase? The increase means reversal of previous write down. So I am saying reversal cannot exceed previous write down, and that is only write down was 10, and we can reverse to the extent of 10. This value is known as carrying amount. This value is known as carrying amount in accounting. When I am saying value, so at what value it is carried in balance sheet? The value at which it is carried in balance sheet is known as carrying amount. So when I say carrying amount, so in your mind what should come? Cost or NRV? Whichever is lower. Whichever is lower. Understood? Let me read now. NRV should be reassessed at each reporting date. Understood this point? If NRV increases subsequently, the amount of previous write down is reversed so that new carrying amount of inventory is lower of cost price and revised NRV. This much. Next point I will do tomorrow. But I hope you have understood this much. Correct now. I'll WhatsApp you. No, I will not WhatsApp. Okay. Correct. I was supposed to give some question, but what I will say, I will don't do any question. Tomorrow will be no class. What you do? Revise from beginning. In day 37, this is almost completed. Almost completed. Chapter is over. You can start doing all the questions of inventory also. Correct? So almost completed means 90% completed. Let me say, please, 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 please. Okay. Always in my class, I say some good point at the end. But if you permit, then only I can say. Always. Correct now. Everyone just try to. Today, what is the message from my side? I always give one good message from my side. That what is the message? That whatever you are doing, that you are doing for yourself. Whatever I am doing for myself. So right now, whatever you are doing, right now you are coming to the class, you are coming for yourself. You are not coming for any other person. So if you are doing for yourself, do that work with full efficiency, full concentration, full determination. Because this is the only work you are doing for yourself. Believe me, what I am saying. Once you become chartered accountant, and you started doing services, you are not doing for yourself. You are doing for that entity. And you are earning money not for yourself. You are earning money for your family. Believe me, someday I think if suppose I have no family, then believe me, I will never come to the class in the morning 6. I will not do this much hard work. Means whatever I am doing right now, I am not doing for myself. But this is what you are doing. You are doing what? Study. This life will never come back. This life will never come back. You will miss once you become chartered accountant. You will miss this life once you will become chartered accountant, because once you become chartered accountant, a lot of responsibility is going to come. And that responsibility will be bigger than this. Correct? Do your work with full efficiency, with full concentration, with full determination. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day.